Good morning and welcome everyone to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. I will explain how the webinar is going to happen. So the first part will be more of an introduction to the company and the services we have in this facility, which is called the Web Trader. The Web Trader doesn't require you to download or install anything, and it's used through the browser. And this is also the platform that we will be using today to have the webinar. We'll go through the structure and how it's built and what functions we have here and what these buttons are doing. That will be the first part. Like I said, an introduction to the company in this facility. And the second part will be more practical, and it will be the basic fundamentals to trade. And that means that we will get to know the concept and how it works. And of course, if we'll have spare time at the end, so perhaps a little bit of analysis, but nothing too crazy. The point here is to give you guys the basics, the basic understanding, which can later on can be developed and become more advanced. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as an investment advice, recommendation, or a suggestion. Now, I understand that sometimes we need to see the webinar again because of any reason really. We want to recap something, we didn't understand something, any reason that there is, you can access this webinar, the recording of this webinar, in our YouTube channel. Okay, so I am going in a certain pace. If you want to watch it again in your own pace, you're welcome to join our YouTube channel, and there you can find a lot of content, not just the recording of this webinar, but other useful content as well. I will just open here a quick notepad for the notes, and of course you guys can do the same. Okay, let's just put it aside so it doesn't interrupt anything, and we'll close that down and bring back to normal. All right, so like I said, we are going to begin with the introduction to the company. As many of you know, we exist since 2006. We have 9 licenses worldwide. In case you got a query or a question, you're welcome to address our customer service here at the bottom left, to either chat with us or through the WhatsApp. Okay, and if you're using a different interface, obviously you're not going to get these buttons here, so you can contact us directly on cs@avatrade.com. Okay, and as I've explained a few minutes ago, the interface here is called the Web Trader. Okay, the Web Trader. Let's just put that aside here. And on the app, it's called the AvaTrades, trading app. Okay, that's if you're looking for the platform on your phone, so you need to search for AvaTrades trading app. And like I said, what I'm using is the desktop version. Now, beside a customer service that can give you customer service, we also have a senior account manager that can be assigned on your profile and to give you full support through the process, getting to know how to trade, analysis, risk money management, making a plan, a strategy, education, anything you can imagine a senior account manager should be able to assist you with. And I'm going to also present you some of the content we have here available for you to use. Okay, so we've got the customer service for customer service, a senior account manager to assist me with trading. And let's carry on and name down the other platforms we have. Even though we will carry on with a web trader, still, it's good to know what other platforms we have. So we have obviously the MetaTrader 4 and MetaTrader 5. Right? Sometimes it's, let's write the full name maybe. Okay, and we also have Ava Options and Ava Social. And now, if we'll look at what Ava Social is offering us, we will see that there is a strong connection to beginners as well. And why? Because in Ava Social, I can automate my trading and copy another trader. Not only that, I have two functions that I can choose. I can either go with copy or follow. Okay, but what is the difference between follow and copy? When I'm following another trader, what will happen is I will get messages with the positions that this trader is trading, and I can choose if I want to also take the same positions or not. Okay, my own manual trading, I can manually take the trades at the same way. And copying means that these trades will be launched automatically on my behalf. So following means I'm getting messages and I can choose if to do the strategy or not. And copying means that a strategy is running according to the person that I'm copying. Now, the advantage using Ava Social is that when you use the app and you get to the screen where you want to copy this other trader, you can also customize the difference. Just a second. You can also customize the lot size, and you can decide if, for instance, you're copying another trader with 200,000 or with 500,000, and so naturally his account might take trades that your account can't. Right at the moment we are with 10,000, so naturally if I'm copying another trader with 500,000, of course he might take positions that I might not be able to withstand. So how do we overcome this? As I've explained, we can customize the lot size, and in the app you can choose you want the same strategy you want your account to trade the same strategy but with a lower lot size. This way you can contemplate and decide if you want to increase accordingly to the success of the strategy that you're trying or any other reason. Okay, it's good to have the ability to custom the lot size. You can, of course, you don't have to do this, but I'm just giving you the option. Now, if we carry on, and of course the app itself is free and I highly recommend you guys to check it out. Regardless if you're a beginner or not, of course, it's very, very useful to be able to copy or follow another trader. Sometimes if I don't have a strategy, I don't know exactly what I'm doing, and I want to just succeed with the success of another strategy. So this is great. Okay, so let's carry on, like I said, with the web trader. We're going to look at some things here on the left. I'm going to teach you guys a nice trick how to get back to the default screen from any other windows here. If, for instance, if we are having the screen like that and we would like to go back to the defaults, so I can click here on trade and it will throw me back. Okay, even if I'm here, so in here at the top, let's begin from the top going downwards. Okay, so in here I have my personal profile. As you can see, I have my numbers here, my personal details and everything. In here, this is the trade. So this is where we are brought when we click here on the icon. It's clickable. In here, I can review my positions, then my orders, and then the history, which I can choose the times. Signals, we're going to go through that in a moment. Actually, let's go through that now. As you can see, there are different categories here, similarly to what we had in the beginning. And I can just, in the signal section, it's divided to, as you can see, it's lined by the production time. So this is the newest, and if I'll scroll down, I'm getting to the oldest ones. Sometimes the signal will appear like, just a second. I'm just trying to find something that is, let's go with USD CHF. As an example, I want to use the signal here, but it looks a bit different. Instead of take profit and stop loss, we have these lines, right? You see. So what does that mean? It means that this signal, its analysis has already expired. Okay, we'll get to that in a moment. I just wanted you to see what it means when it has these lines instead of the price. Okay, let's go back to the top. Let's take as an example USD ZAR. As you can see, the value for $1 is at the moment 18 and a half is South African rands. So if I'll click here on the view signal, we get the signal to open, and as we can see, there is a certain scenario here. This time is a sell, and in this sell scenario, we have the entry price, we have the beginning of the signal. This is what the entry that it was based upon, and since this is a sell type, in a sell type, we want the value to decrease, right? When I want to buy, when I want to acquire anything, okay, then when I'll sell it again, I want to sell it in a higher value, right? But when I sell in here, I want the value to decrease, okay? Basically, when I'm buying something, I want the value to increase, and if it gets higher, I make profits because I can sell it for a higher price. And when I'm selling, I want the value to decrease. Now, since this is a sell and my intention is that the value will decrease, there is something that is called take profit, which is a price, okay, that I can set, and the platform is going to close the position on the price that I set. Okay, so you can see take profit, preset take profit to book potential profits when the market is moving in your favor. Okay, but how will I know how to do that? To place the take profit. And also I have stop loss here. What's stop loss? Preset the stop loss order to minimize losses when the market is moving against you. So if my intention is that the value will decrease, well, if it goes down, I make profits. I can even set automatic order to close my profit. Let's say here is an example. Okay. And again, if this would have been a buy, it would have been the other way around, right? But since this is a sell, our intention is that the value will decrease. Therefore, the take profit needs to be in a lower area and the stop loss needs to be in a higher area. Means that if the value will increase, God forbid, then we'll have losses. Okay, now when we have this in mind, those, by the way, are called pending orders. Why they are pending orders? Because they are pending on the chart, waiting to be triggered when getting to the price. Okay, so we got this in mind. We now know there is something called take profit, something called stop loss. We can design them accordingly. They're going to stop the position automatically, either with the profit or either with the loss. That is amazing. How is this connected to the signal? Well, the signal is giving us exactly that. That means that if I'll click here on view signal and we see that the scenario here is a sell, that means that this is the entry price. This is what I'm aiming. Oh, sorry. This is what I'm aiming to get to using the signal in a sell scenario. So I'll click here on the signal. I will expand the chart. I can also match the validity of the chart that we see here to the time frame we're having. As you guys notice, there are levels here. Okay, in orange, we got the 191990, and higher, there is something called resistance in green. There is something called support in red. Okay, this thing called resistance, they are edge points, peak points on the chart. Okay, levels. Let me see if I can find one for you. Okay, we'll change the time frame in a moment and then we'll do it together. Just a second. All right. So what I can do instead, as you can see, we cannot see the levels. We don't see the levels that are here on the chart. There's 19.9540, and we just don't get there. And why is that? Because in here, it's daily time frame. So each candle here is a day, right? This is today, this is yesterday, this is the day before. It's a bit difficult to see because of the yellow line, okay? So let's switch to days, like in here, and then we get access to the levels that we see here on the chart. So let's mark 19.9540. That is a little higher, maybe like that. Yeah. Okay, so let's you see, so one way to do it is to click and drag it across. Another way to do it is to place it anywhere, really anywhere on the chart. Let's say even here as an example, and then to click here on the white wheel, we'll click and we'll set the price to the coordinates 19.9540, and we'll change maybe the color as well to green, just like here, and we'll click save. All right, and then we have here the resistance. Okay, great. We could do the same with the support. At this point, I'm not even going to bother because I'm just showing you the idea here of how the signal goes. So in a sell scenario, okay, we want the value to decrease. That means that the take profit needs to be in the lower area and the stop loss needs to be in a higher value. Okay, so it would make sense maybe to take this green and make it lower. Okay, never mind. Okay, the idea here is very simple. We have two scenarios, a sell and a buy. If I decided to go with a sell, I click here on the sell. You see that the take profit and the stop loss are already here. I don't have to do any analysis if I don't want to. So I can click here sell. And then as you can see, the take profit is leading me to a potential profit of 1,000. The stop loss is leading me to a potential loss of 600. Of course, if I'm not happy with that, I can just change it. Okay, and I can also change the lot size, maybe to something else that I want, as an example. Okay, but you guys get the point. It's very, very easy to use. So let's take another one just for fun to demonstrate for you guys. Let's click here on view signal. Once again, we have here the analysis. We can expand the chart. In here, it's daily. Okay, we are on daily. That's great. If I'll scroll down, we have here the elaborated scenarios which I can pick from. Because this is a buy type, that means that we now want the value to increase, right? To increase. That means that the take profit needs to be in a higher point. Okay. On the contrary, from the sell type. Okay, at the moment we can proceed. Do we have any questions regarding the signals at the moment? You guys can see this is, if I don't do any of this analysis, just to demonstrate how fast it is to use the signal. So the first click took me to the signal section, second click to open the signal, third one will already prepare me to take the position. So 3 clicks away, around I think 15 or 20 seconds, and we are good to go. And we can customize whatever we want to further adjust it to our strategy. All right, if we'll scroll down, so we've covered this part till the signals. Underneath we have the news section. Oh, just by the way, before we proceed, that is important to know that the signals are not manufactured by EduTrade, they are provided by the Trading Central. And if we'll scroll down to the news section, we see that the news section is provided by the Trading Central as well. Now, if we take a look at what we have here at the top, we have here different categories, the same way we had with the signals. As you can see, the signals, we can choose what category we want. Maybe if we want gold as an example, so you can see. So in here, it's similar. We can click here on news and maybe also go to commodities, just as an example. And the advantage using this news section is that it's hinted, as you can see, if I'll scroll down, scroll down, scroll down. In here at the bottom, there is related instruments. What does that mean, related instruments? If I'll click here, this falls down, and we have crude oil, gold, Bitcoin, and pound versus dollar versus USD, which could be related to the article. So that means if I'll read this article, I might have a better idea how to trade those named instruments, which can save a lot of time, right? Because I can be more specific. Underneath, I can this to refresh the page. Underneath, we have discovery. In discovery, there are many things. We're not going to cover all of them. We don't have time for that. But we will, let's have a look at the market buzz. Okay, and in the market buzz, let's just give it a moment. Okay, and in the market buzz, we have this bubbly, well, bubbles. Okay, if I don't like it this way, I can change the layout to a table. Then we get a list. But I just maybe let's keep it like this for now. And then we can see, depending on what's more popular, what has more mentioned, it will pop and be more, bigger than the rest. So as you can see, we have here NVIDIA, Tesla, Plant Technologies, Google, Microsoft, Apple, all kind of things. Let's go with what's in the middle. So let's go with Google Alphabet. And in here also divided to different categories. As you can see, those are the topics that mentioned here to the right. So if I don't want to read all of that, and I just don't want to read all of that, but I want to specifically focus my analysis on the earning announcements. So I can click here on earning announcements, and then to go specifically to the article that I'm interested in. Of course, it doesn't have to be this. I'm just showing you guys. Let's go with maybe revenue increase. Okay, and then I can further, take it to the next level and maybe expand and read even more news about the same topic. You guys can take it as far as you want. Yeah, so this is one way to use the market buzz. I can just go back and pick something else if I don't want to. Again, in here we have categories. We can go with something else if we want to, but I don't want to waste on time. I don't want to waste any more time on that at the moment. It's why it's quite self-explanatory. You click and then you read, and yeah. One more thing, just one tiny thing before we begin the second part. As you can see here, this globy icon discovery, it has at the bottom, it has the trading calculator, but above it has the economic calendar. So let's click on the economic calendar. And similarly to the news, okay, so just really an introduction to trading, nothing too crazy. In trading, you have two types of analysis. We have fundamental and technical analysis. Okay, and just a second. Okay, and what we saw in the beginning, the signals, is more technical analysis. We saw the charts, we saw the support and resistance and the numbers and all of that. And fundamental analysis is the news side. What does that mean? This is in the beginning when we saw the news and when we saw maybe the market buzz as well, all the reports and the revenue increase and all this kinds of news. Those are the reasons of the movements that we see on the chart. So we need to learn how to combine the numbers we get from the chart and the news that we consume from outside the charts. One way to extend that is to be familiar with different economies. And how do we do that? Exactly with the economic calendar. So as you can see, there is a red line here that separates past events that already has the result to events that yet to happen and, well, doesn't present the result. Okay. And in here we have category, well, not categories, but we have different way to filter the, the presented events, and that's by the flags. If I'll click here on the arrow, it will fall down a long list, and from this long list, I can just choose maybe, just a second. Let's go with a pound maybe. Okay, we'll click here. Let's say pound and maybe the dollar. Okay, so all I did is just tick the box, right? Nothing too crazy. And if I'll scroll up, then we see how the economic calendar is structured. We have here the previous result. We have here the result that we're expecting to get to. And we have here the actual, which is the result. And in here, we have how strong we think that this event will impact the market. Do we think it's going to considerably impact the market? Do we think that it's medium or low? And that as well is something that I can filter. So if I'll click here on the high, it's only going to show me high impact events, and same for the rest. In the dates, so at the moment it's showing us the 5th. Let's go for the 5th. And let's extend it until the end of the week. Okay. And now if we examine what we have this week, okay, we don't have a lot of news for the pound. Maybe let's take it off to better focus on what we get here. Oh, something has happened. Just a second. Okay, and yet it's not presenting as the, oh, there we go. All right, so now let's maybe NFPs this Friday. So as you can see, the NFP is one of the common reports that we can analyze, and this is basically a report that shows us how many new jobs were created beside agriculture field jobs at the to US. And as you can see, last month, 256,000 jobs. The forecast is that it's going to be lower this month, 205,000 this month. And on Friday, we're going to have the result. Okay, in 2 days, we're going to have the result. It will appear here in the actual. All right, and according to that, we can, of course, judge whether the economy is handling well, or maybe it's not doing too well, and then the interest can be adjusted accordingly. This can evolve very nicely. Yeah, I think we covered everything we should in the first part. So let's begin the second part. The economic calendar is really something you can explore by yourself. It has many useful things. In here, you can add your, the event to your calendar like that, and you can add it to the calendar. You can see here all kind of additional analysis. The impact and the volatility and the price. But I don't want to waste any time on that at the moment. You guys can explore it. Let's begin the second part. We'll go back to the default screen by clicking on the icon here. And we are in the initial screen. So let's fold it down. In here we have, as you can see, there is a blue lightning icon here. That's the same as the signal from the signal section, right? So if I'll click it, it opens the signal. Okay, you can either use it from here or you can use it from here. Just a quick tip, that's all. All right, so in here in the categories, let's open commodities and let's maybe go with metals and let's maybe go with gold. And in the past few days, broke another record. To customize the chart better to your needs, what you can do is you can click on the column area, the price column area, click and drag. And then once you've done that, you have enabled yourself to move the chart up and down. The second thing you would like to do is to click buy or sell, and then the side panel will open and you can better design the position before you're taking it. In here, what you would like to do as an addition is in here, you can search your instrument and then click it and it will take you to the chart. If I go to the right, we have here the time frames. We already saw that with the signal section. If I'll keep going to the right, in here I can change the layout if it's candlesticks or if it's this nice artistic line, okay, or maybe bars. If I keep going to the right, we have here the crosshair or no crosshair. No crosshair means no data. No data, no numbers from the chart, which we don't really want that. So we'll click here on the arrow where we will enable from no crosshair to crosshair. And now we get data from the candles, which is amazing. We get the data, open, close, high and lows. We can further take it and analyze it to our needs. Okay, in here I can change, have multiple charts. We can have 2, we can have 3, we can even have 4, right? And go crazy with an else. All right. If I keep going to the right, we have here indicators. We're going to apply one anyway, so there's no need to delay on that now. And in here at the end, you have the sell and the buy. And before that, you have this nice list of ingredients that can help you customize the chart and have better understanding where you are and where you're aiming. Okay. And now, before we begin, let's just flatten that out. Okay, the 3,000 mark. All right, and we have gold. Let's also take that to the bare minimum, just so we can simulate. And let's tick 3 of those boxes. Execute when price hits, take profit, and stop loss. Okay, and in both of them, we're going to place the existing price. Let's make it like that, 2869. Maybe make it like this, and at the same take profit and stop loss, we'll put the price until we decide to change that. Now, the reason that the numbers here are changing is because of the spread that keeps widen and tighten when the market is moving. So, for instance, if I'm gonna do this, you will see that the numbers are more or less the same. Okay, and they're not, this is not the exact value we have, it's a different number. So for the demonstration purposes, let's maybe call this a buy. At the moment, I haven't done any analysis, but I guess all of you guys can see, and in the past, roughly, let's have a trend channel. Okay, since December, roughly for 2 months at the moment, gold is being bullish. Bullish means going higher. Okay, bearish means going down. And at the moment, I am thinking of maybe the 3,000 mark is a target, but I want to confirm before I'm taking a buy, because I don't want to take a buy now and maybe it will turn around and I will lose instead. So first of all, I'm going to put it as the take profit, 3,000, and then I will validate with maybe the indicator or through the chart if it's realistic or not. Okay. At the moment, with 0.01, if it gets to the 3,000 mark, we will be making 131. How so? Okay, let me show you guys. That is because this is $130 away. And since we just have 1 ounce, that means every dollar will give us a dollar profit or loss. For instance, instead of the 3,000 mark, if I just increase it by 100, like this, so I can make 100. If I'll increase it by another 100, so I can make another 100. If I increase it by another 100, never mind that this is very far-fetched price considered to where we are at right now, but I'm just demonstrating you here a certain concept. Now, if I will increase by 100 like this, and I will also increase the number of units that I acquire. For instance, I will increase it instead of 1, let's make it maybe 5. Okay, so my profit of 100. Okay, let's look at it together. You see? Now, just a second. We will increase by 100. Okay. See, now we can make 100, but if we increase, then it multiplies by 5. Okay, great. That means that for every unit I have, every dollar will give me a dollar profit or loss. Okay. That is great to know. Let's write down the name of our instrument. Okay. And now we can work. Now, the reason that I'm jotting down those things is because I need some guidelines to design a position according to, right? At the moment, if I'm just gonna click here buy, I'm gonna make $100, but I don't want to make $100. I want to make much more than that. Maybe let's make it 1,000. Okay, our target will be 1,000, and it will be. Also, I need to think of a reasonable time to make it. And we are looking at weeks. Let's stay with week. I guess 4,000 a week is not really bad, right? Okay, since 1,000 a week means 4,000 a month, right? And that it means 48,000 a year, which again, doesn't sound too bad. Right? Have I done this correctly? Let's check. Oh. Okay, so at the moment, let's focus on what we have, 1,000 per week. And at the moment, we also want to somehow verify how far can gold get to in a week. So we will know if this 3,000 mark is valid or it's maybe too far away. How we can do this? One way is, of course, using the crosshair that we have enabled, and we can manually go candle by candle, jotting down the numbers. Just a second. Jotting down the numbers from the open, close, high, and lows. That means if, for instance, I'm pointing on the last one, let's see, last week it was the 27th. Okay, we can see that the open, just a second, we'll jot it down. The open is 2767. Then we have close. Okay, and then we have high. And then we have the low. Okay. And now, if I use this structure and I simply subtract the open from the close, and then I'll have the difference, that means that it moved approximately $23 between the open and the close. And between the high and the low, okay, $86. How does this make any sense? Well, I'm looking at the candle here and it makes perfect sense. We can see that the body of the candle, let's examine it together just real quick now. We're not doing any crazy analysis, just having a look here at the candle. I think a rectangle will work, and we'll maybe, yeah, we got to get rid of the background so we can better analyze it and change it to something that doesn't, maybe like that. Yeah. Okay, look at the orange rectangle we've marked. I don't think we can see it. Maybe make it yellow. Yeah, that's a little better. Okay, and as you can see, there are different levels here. There are two levels for the open and the close that I've marked in pink lines, and there are levels for the high and the lows. What does that mean? It means that the high and the low, let's paint them in gray maybe. Okay, and then we see that the high and the low has a bigger difference. It has a bigger difference. That means that this candle began being bearish, right? It started going down, and then it climbed all the way up, and then it ended at 2794, right? We can see it together, right? Oh, sorry, 279342. This is where it closed. How can I possibly know that? Because the shape of the candle. Okay, this is how we can verify that. Okay, you see it started going down, then it went higher, but eventually it closed here. Okay, great. And now, oh, sorry, we'll do it this way. Okay, so started. Okay, let's go back 2 weeks. Okay, and that is great. Now, the problem using this technique is that one candle is not quite enough. One candle just stands by itself individually. So to have a more accurate number, we'll have to analyze going backward, and this will consume all of our time. So instead of doing it manually, we can apply an indicator. We'll click here on FX indicators, and where it says type the filter, we'll search for average true range, AVE for average true range. Click and drag it to the empty frame to the right. In here, we can also maybe change the color to be just different from what we have on the chart. And okay, with the numbers we have here, we see that the average movement is actually much higher, $82. $82 and not 23, which is almost what it moved last week. Okay, so 82 is the ATR, not bad. Okay, and the potential average movement that I think it can move will be maybe 80. Okay, just as an example. Now, if for instance, okay, I'm looking at the 3,000 mark and I'm thinking, is this something that gold can get to? Let's try. If I'll add 80 to the current buy price, let's do it together. Current buy price is 2869.5 plus 80, that brings us to 2949.5. Okay, not quite 3,000, but okay, 49.5. Okay, that's the average movement. Of course, it can make us 80 because it's $80 away. And we've understood 5 minutes ago that for every unit we acquire, we get 80. So if I would have 10 like this, then this would be 800. Oh, something here has changed. Let's bring it back. Oh, let's bring it back. Okay, 800. And if I would have one lot, what was one lot? One lot is 100, so 8,000, right? Great. Now, how can I know the necessary units that I need to make 1,000? Because I don't want to make 80. We already wrote down here that the target is $1,000, right? So how can I do this? Well, the easiest thing to do is just to divide my target by the movements, and then I get the units. So 1,000 divided by 80 is how much? Let's look at it together. 12 and a half. Great. Now, unfortunately, I can take half of an ounce. It's not doable. The minimum is 1, right? So I gotta choose if I'm rounding it up or down. So 12 and a half, sorry, yeah, we can either make it 12 or 13. So let's make it 12. Okay, and we can see that we can make almost this $1,000. Of course, I'm not gonna be too sad if it's $34 less, right? Because I can split and I can diverse and so many things. So let's maybe jot it down like this, like that, and then round it to, actually, let's make it 13. Why not? Let's make it 13, like this, 13, and we make slightly more than the 1,000, and that is not bad at all. All right, great. We've completed the 4 ingredients. We have target time, movements, and units, and at the moment we also set the take profit that is realistic, that is based on the average, and that is just amazing. Okay, we'll put it as a green to mark our take profit. Okay, we'll extend it. And now we need to also think, if it doesn't go well, what will happen if it goes the other way around? Okay, so we can use the same reference as 80, and instead of adding it this time, we can subtract it this time. You remember that I've explained in the signals in the beginning, when we look at the signals, that when I'm in a buy scenario, our intention is that the value will increase. So when we are in a buy scenario, if it goes lower, that means that we will have a loss. And to prevent mass loss on the account, a bigger loss than we expect, we can use the stop loss to stop losing more. So instead of adding it to the price, designing it in a higher point, we can subtract it from the price and imagine the same value for the loss. Okay, now I will be frank with you guys. I'm not too a big fan of one-to-one ratio, so we will also learn how to we'll learn how to adjust. Just a second. Current price is 2,869 minus 80, and that is 2,789. 2,789. All right. Now this might work. This might work, making 1,000 or losing 1,000. But I also want to learn how to adjust it. So how can we adjust it? Let's look at it together. TP stands for take profit, stop loss stands for stop loss, and you guys don't have to remember anything because it's written here, right? Everything is written here. Just point on the bubble and it's telling you what it does. And of course, the execute when price hits is super simple to understand, and I didn't explain it because it's self-explanatory. What it does is it execute when the price hits. When the price hits, okay? If the price gets to that level, it's going to launch the position. It's going to execute the position depending on if you're with a buy or with a sell. Okay, it's self-explanatory. It lets you trigger the entry. All right, now our take profit is at 2949. Okay, and our stop loss 2789.5. Perfect. Now, both of them can lead us to 1,000 profit or loss, but we don't like that. So we would like to adjust and keep it at 10% profit, but this 10% loss, we wanted to make it maybe 2.5. So what we can do, the easiest thing to do is just to devalue the reference value, which is 80 by 4, right? How much is 80 divided by 4? 20. So instead of our stop loss to be $80 away, which is, oh, okay, well, okay, this one goes in red. Okay, instead of being here, I could potentially place it, just a second, it's a bit difficult to show you, but I will try. I will place it $20 away. $20 away is somewhere here. Of course, we're not talking about if it's a wise decision or not, because gold can flinch back to that price while I make tea, right? It can go back just as fast. But at the moment, we're just demonstrating. It doesn't have to be this close. We can find the sweet spot to how close we want the stop loss to be. But in terms of numbers, that gives me the perfect solution to make it a 2.5. Okay, and now if the stop loss is, if we make it, what number did we get? 48, right? Yeah, 2848. So let's see, 2848. Okay, yeah, roughly 250, you see? And 250 is 2.5% from my balance. How can I verify this? Okay, I'm going to teach you a nice trick now. Just a second, I'll teach you a nice trick. Okay, we can divide, we can take our balance, we can divide our potential loss by our balance, and then multiply that by 100, and that gives us the percentage exposure. What does that mean? That means that we can take this 267 divided by 10,000, which is that, right? Okay. Okay, and then if we multiply that by 100, we see that the exposure is 2.67. Okay, let's do it together now. Okay, you see? Now, it's important to understand that these numbers are referred to this position solely. That means that those numbers are for this position only, and if I diversify and I have other positions, I should include the positions in my strategy, and I will syndicate my exposure accordingly. So if I set an exposure for my account for, let's say, 10%, or maybe 5%, let's go 5%. Okay, this is the total exposure that I want to work with, no more. So if I take similar positions like this, I'm already exceeding. Again, it's not too crazy. I mean, let's look at it together. Okay, it's not too crazy. 534. But again, it's important for me that you guys will understand what the general concept. Sometimes people aim to expose 5%, but I take 10 positions, right? And if you take 10 positions and you're exposed 2 point something per position, you're past beyond that. Okay. If I have 10 positions with similar exposure like here, and I don't include that, okay, that's quarter of my account. So just pay attention, and just if you go through this process and you design the position this way, it's easier to manage. Okay, if you don't do that and you randomly take positions and you don't consider the rest of the positions in your exposure, so this it leaves you more vulnerable, if it makes sense. Now, the last thing before we say goodbye that I would like to show you is the margin impact. Okay, as you can see, the price per unit now is 2,868. Okay, what if I want to take, well, 13 units? Okay, naturally, I would think that the amount that I need will be 2,868 times 13, right? But it's not a real value that I need. It's the value for this position, but it's not the value that I need. How so? Because we've got here leverage, and what the leverage does is it multiplies your buying and selling. As you can see, if we read here, an option to open a bigger position than your account balance by having your broker multiplying your investment amount. That means that my account can behave as if it had 200,000 for gold, because the leverages can be different. If the leverage would have been here 10, so I could use as if I had 100,000. So we also need to pay attention to that. That means that because I multiplied by 20, if I will divide this value by 20, we get the margin impact, which is the actual amount, which is the necessary amount that I need available to open the position. So in the last minute, what we will do is we will recap everything we have done today, and that shouldn't take us more than a minute. In the beginning, we valued gold as potential buy scenario. We watched gold for the past 2 months to see that it was bullish. We also targeted 3,000 initially, but we compared it with the average, and we've noticed that it's very far away. It's $130 away when the average is only 80. Okay, when we use the average as a reference to target the take profit, we noticed that we need more units than 1, and we have increased from 1 to 13, with the understanding that for every dollar that it moves, we can acquire $13. So $13 times 80 gets us even beyond the target that we had, which was 1,000. And then when we got the reference, we also use it to design the stop loss. In the beginning, we had a ratio of 1 to 1. And when we wanted to adjust it, we took the stop loss a little higher. And then we have compared 1,000 versus 250, which is 10% versus 267. Now we verify that we have the ability to take the position. It's necessary to have 1,864, and we have available 10,000. So we can definitely take it. Guys, watch the steps in the process and let's focus on the numbers. That's what I wanted to show you today. I hope that it helped. I hope that you've learned at least one thing from this webinar today. You're all welcome to join us tomorrow to the live Q&A. Until then, I wish you a fruitful week. Best of luck with trading and have a good day.